You in the market to buy a house and are just upset or frustrated or think that mortgage interest rates are getting in the way? Stay tuned. In this video, I'm going to tell you why high mortgage rates are an absolute blessing and why you should be thankful for them. All right, Matt, the Mortgage Guy, residential mortgage broker, powered by You Mortgage. In today's video, I'm talking about higher mortgage rates. A lot of stuff that I've been seeing on both sides, either consumers or professionals talking about interest rates are high, they're due to come down. That's a good thing. And I want to tell you in this video why I personally think that people are going to be very disappointed at how the market behaves if and when mortgage interest rates come down. So let me explain. We've had a relatively higher than the past couple of years interest rate environment over the past year. If I look back and kind of track how long we've been, call it above 6%. It's been 9 months plus, coming up on 10 months since last September. We've bounced between 6% and 7%. And so the market has kind of gotten used to this higher interest rate environment, but still it poses affordability issues for buyers. There's no sugarcoating the fact that when you borrow hundreds of thousands of dollars at 6%, 6.5%, 7%, it comes with a lot higher payment if you finance that same amount at a 3% or 3.5% interest rate. But here's the problem. There's such an inventory shortage. There's so little supply of homes for sale that even with these higher interest rates and these higher payments, it's competitive. And if you look at the data from the last few months in a lot of markets, there still is this upward pressure on home prices because of that supply versus demand, constraint. I saw something really good the other day where a real estate agent made a TikTok and, the market was 7% rates, and it kind of shows a real estate agent jogging down the middle of the street. And then the market at 6.5% rates, and a few more agents joined the pack. The market at 6% rates, and more agents joined the pack, 5.5 and 5. And you get the picture. By the time rates were at 5%, the street was filled with real estate agents, buyers. You get the picture. It's a metaphor for what the market is going to look and feel like. And so here is my warning to people who are waiting for lower interest rates. If you wait and you're hoping that you're going to buy a house at a lesser price or even the same price at a lot lower interest rate, it's highly, highly unlikely. And based on everything I've seen over the last few months, because we've got 100+ pre-approved buyers, we're talking to hundreds of clients every single month who are at one stage or another, just getting pre-approved, actively looking, in contract, just closed. Like, we have a finger on the pulse because we're talking with so many of these clients, working with so many of these clients across the country. And the overwhelming sentiment is that, they didn't realize it was going to be this hard to get an offer accepted. They didn't realize it would take multiple offers on different homes. And nobody really enjoys that experience where you're competing. And so if you put lighter fluid on the competition, which is what lower interest rates would do, it's going to be a market that a lot of people don't enjoy. And so the same people that in 2021 were like, man, this is too competitive. It's selling for $80,000 above list price. It's got 24 offers. I don't want to have to compete. Well, now's your time if you don't want to compete, because like I said, it's still competitive, but comparatively to 2021, it's less competitive. The homes that got 24 offers now get 8. The homes that got 15 offers now get 4. The homes that got 8 offers, you might be one of 2, right? A lot better chance of getting your offer accepted. And so you, to a certain extent, need to pick your poison. Do you want it to be competitive as heck and hard and wild bidding wars? If so, root for 5% interest rates. You might, pay $50,000 more, but if it feels better to have a 5% rate than a 6.5% rate, then you win in that scenario, right? But all I'm saying is you might want the payment that comes with a lower interest rate, but you certainly don't want the market. And, if I would say anything about a lot of folks that see different reasons, whether it's, Airbnbs being oversaturated and those investors selling, other investors that got into deals that don't make a lot of sense and they're selling, whatever reason you have for more inventory coming to the market, rest assured that a trickle down in interest rate is going to add the same or if not more to the buyer pool than we see in the seller pool. So I don't see us in any sort of buyer's market anytime soon. The next 12 to 24 months, as inventory is tight, especially if interest rates trickle down a little bit, it's going to be a market in which sellers have leverage, in which you're competing for few houses with a number of buyers. So that's my 2 cents. Don't necessarily be upset with the interest rates. Do what you can in this market, knowing you're against less competition. Figure out a way to structure a mortgage that makes sense for you. That's all. Hopefully this is helpful. Check out the other hundreds of videos I've got somewhere on this channel. And until next time, we gonna see.